Ripple just locked down another critical piece of infrastructure. And this one is a direct bridge from DeFi all the way to Wall Street. I'm going to walk you through exactly how this connects to the DTCC and how the largest financial institutions on the planet are going to use this new product to secure their financial infrastructure. Look, access to financing is absolutely critical for institutional participants operating in today's fast-moving, dynamic markets. And with Ripple Prime's latest move, that ability just got significantly more powerful. They are proud to announce a partnership with Neuberger on a $200 million debt facility, designed specifically to meet the rising client demand for institutional-grade prime services and margin financing solutions. Bigger balance sheet, better capital efficiency, best-in-class service. Let's get into it. Here it is, May 11th, brand new. Hot off the press, ladies and gentlemen. Ripple, the leading provider of blockchain-based enterprise solutions across both traditional and digital finance, has today announced the successful close of a $200 million debt facility. Funded by funds managed by Neuberger Specialty Finance, the dedicated asset-based investment team within Neuberger, a globally recognized investment management firm. This facility has been structured to support the continued growth of Ripple's multi-asset prime brokerage platform, Ripple Prime, amid surging client demand for institutional-grade prime brokerage services and margin financing solutions. And here's what makes this even more impressive. Since Ripple acquired the platform back in 2025, Ripple Prime has tripled its revenue year over year. Let that sink in. Tripled. Year over year. Now let me break down why Ripple Prime's growth has been so sustained and so strong. The platform's expanding client activity and rising demand for prime services and financing solutions has been driven by two key forces: increased participation across both traditional and digital markets, and the growing need for reliable counterparties, partners capable of delivering consistent, dependable access to capital at scale. And this is exactly what Ripple Prime is stepping up to deliver. As Noel Kimmel, president of Ripple Prime, put it directly, dependable access to financing and balance sheet strength are absolutely critical to institutional participants in today's dynamic markets. This facility enables us to grow alongside our clients by delivering increased margin capacity, greater responsiveness, and improved capital efficiency. She went on to say that Neuberger Specialty Finance brings deep experience and expertise in asset-based finance, along with a strong understanding of Ripple Prime's unique business model. Their support reflects the differentiated prime services platform Ripple Prime has built and the significant growth opportunities that still lie ahead. So what exactly does this facility do? Let me break it down clearly. The facility enables Ripple Prime to draw up to $200 million, providing maximum flexibility as client needs continue to evolve. The proceeds will be used to extend financing to clients who are actively engaging across both traditional and digital markets, effectively increasing Ripple Prime's lending capacity and enhancing its ability to serve both new and existing institutional relationships. From the Neuberger side, Peter Sterling, head of Neuberger Specialty Finance, had this to say: Ripple Prime has built an innovative brokerage platform, combining fintech-grade technology and agility with bank-level compliance and operational rigor. This facility reflects our focus on partnering with market-leading platforms, and it's a testament to Ripple Prime's unique position at the nexus of traditional and expanding digital markets. The deal team, led by Jay Berger, is pleased to support the company's ongoing growth and success through this creative solution. Bank-level compliance, fintech-grade technology, that combination right there. That is what sets Ripple Prime apart from everyone else in this space. And I want to highlight something important here because this momentum doesn't just build on its own. Markets recognize strength. Markets recognize reliability. We already saw clear validation of Ripple Prime's strength and technology with their investment-grade issuer rating from Kroll. And now this $200 million facility from Neuberger only adds to that confirmed credibility. Momentum builds when the market starts recognizing these things, and right now, the market is absolutely paying attention. Now let me show you how all of this is supposed to come together, because there are a lot of moving parts here, and I completely understand if it feels overwhelming. But stay with me, because this is where it gets really exciting. You have XRP, RLUSD, BNY Mellon, the DTCC, and now, Ripple Prime sitting right at the center of all of it. Here's a breakdown that really lays it out clearly. Ripple Prime, DTCC netting participant. XRPL Depository Receipts. Hidden Road, NSCC Listing. XRPL Post-Trade Flows, Tokenization Service Participant. And here's how the trade flow actually works. Ripple Prime comes in with their clearing code 0443. At the top, you have the central counterparty, the DTCC. The trade details flow through the cash lender, the data file, verified trade instructions for both the cash lender and the cash borrower. Then you have the cash book, the process match trade, novation, trade maintenance, and then down below, netting and margining. And this is where BNY Mellon steps in, as the DTCC clearing bank and custodian. BNY Mellon, the Bank of New York Mellon, right there, plugged into the middle of this entire architecture. And then you have the DTC tokenization service. Ripple Prime is a participant. They're part of an industry working group with 30-plus firms. BNY Mellon is the custodian and tokenized deposit partner. Here's the timeline of how this all plays out. Initial tokenized trades in July 2026. Full launch in October 2026. XRP ledger interoperability for post-trade flows. Now the biggest question on everyone's mind is, how much of this is XRP and Ripple going to capture? I've seen some people say maybe 5%. I've seen others guess it's all of it. Realistically, I doubt it starts anywhere near all of it. It probably begins at 1%, maybe 2%, and then it builds from there. But here's the critical takeaway. Ripple and XRP are now both plugged directly into the DTCC. They can work in clearing, in trade settlement, and in providing liquidity across multiple asset classes. And as this infrastructure matures, you are going to see more and more XRP and Ripple utilization as the days and months go on. Let me put this diagram up on screen for a moment so you can really absorb it. You have the cash lenders on one side. You have the trading venues. You have the cash borrowers, institutions like Barclays, Jefferies, Vanguard, Citadel. The DTCC sits right in the middle, routing flows back and forth between cash lenders and cash borrowers. And then, of course, you have BNY Mellon as the clearing bank. And if you look down at the bottom of this diagram, you will also see the Federal Reserve listed. That's not an accident. That's not a coincidence. That tells you everything about the level and scale of integration we're talking about here. I'll leave this diagram on screen for a moment. Feel free to pause it, zoom in, verify the details yourself. Now, before we keep going, people are absolutely raving about Uphold's latest technology, and I have to talk about this because I've been using it almost every single day. I just got back from Japan, and honestly, getting in and out, paying for taxis, paying for food, I used my Uphold debit card the entire time. Anywhere Visa is accepted, you can use it. And the best part? I'm getting 4% back on everything I buy, paid in XRP. That is absolutely incredible. You can spend dollars across 300-plus digital assets instantly, no credit checks, and use it anywhere Visa is accepted. It's ridiculously easy to load up your card and start earning rewards everywhere you go. You really can do more with the money you already have. Your bank is not going to give you anything better than an average savings rate. But exchanges like Uphold are stepping up and competing for your future business, and that matters. And I'll tell you, I know there's even more technology coming down the pipeline from Uphold. There are going to be a lot of announcements over the next few months. Make sure you are fully taking advantage of everything they have to offer. If you don't have an account yet, seriously consider signing up today. Use my link in the description. It supports this channel directly. Let me know how you're using Uphold's technology down in the comments section. Let's keep going. Now let me share some of the community commentary that's been making the rounds, because some of this is really good. Vincent Van Code put it perfectly. And look, he called this, "Told you. One day Ripple will get into liquidity financing. Wait until this 200 million number becomes 20 billion on-chain, and the role for XRP becomes not only the bridge, but the margin facility itself." And that's exactly what a lot of the sharpest minds in this space have been speculating about. The vision isn't just XRP as a bridge currency, it's XRP as the collateral layer, the margin facility, the liquidity engine of institutional finance. And Charter made an excellent point as well. The conversation has shifted from doubt to confirmation. This DTCC Ripple timeline from Smoke speaks volumes. Full operational capacity for DTCC-cleared OTC flows to settle on the XRP ledger is expected to arrive in the second half of 2026. Let me walk you through the complete timeline that Smoke laid out, because this is a roadmap worth knowing. April 2025, Ripple acquires Hidden Road. May 2025, DTCC patents name XRP as a bridge asset for liquidity. October 2025, deal closes, Ripple Prime fully established. December 2025, SEC no action letter clears the DTCC tokenization path. March 2, 2026, Ripple Prime goes live on the NSCC directory. May 2026, Ripple Prime joins the DTCC tokenization working group. July 2026, limited production tokenization trades begin. October 2026, full launch. The path for XRP to finally access the derivatives market is now clearly mapped out, and it is happening this year. Let's go. And let me bring in one more crucial piece here. Mike Higgins, the CEO who runs Ripple Prime, directly confirming that XRP will be used as collateral alongside Bitcoin in institutional finance. Here's what he said. Is it just dollars or US Treasuries? No. It's Bitcoin. It's Ethereum. It's stablecoins. It's tokenized money market funds. I think the next step is really when you start to tokenize anything of value and use that for good collateral, as margin and for settlement. We're still early in this space. Bitcoin, Ethereum, XRP, Solana. These are becoming no different from regulated exchange-listed assets within the complex of institutional crypto. He also pointed out that there's a long runway ahead for cross-margin advantages, and the revenue opportunity in trading the basis between different assets is extremely attractive. Love to hear that. Let's keep it moving. Now here's something that I think deserves way more attention than it's getting right now. The XRP ledger is now the #2 blockchain globally for tokenized commodity value, having reached $2 billion and capturing 26.32% market share. Institutional adoption of the XRP ledger for real-world assets continues to absolutely accelerate. I went and verified this math myself. Behind Ethereum at nearly $5 billion, the XRP ledger is #2. But here's what makes it even more remarkable. Ethereum's market share is actually down 6.55%. Meanwhile, the XRP ledger is up 79%. 79%. And when you look at every other chain in comparison, Polygon down 23%, Arbitrum down, BNB down, Solana up slightly, Base down, XDC down, Stellar down. But the XRP ledger, going up, aggressively. The growth is truly astounding. If you scroll down and look specifically at what is being tokenized on the XRP ledger, here's what you're looking at. Total represented assets of value, $3 billion, up 53%. Just token, $1.8 billion, up 104%. CRX digital assets up 22%. VERT up 10% at $379 million. RLUSD up 13% in the last 30 days. ONO up 45% in the last 30 days. Marico Bitcoin up 1%. Braza Crypto up 20%. Open Eden digital assets down 28%. Looks like Open Eden has some catching up to do. But leading the entire charge for digital commodities, Just Token at $1.76 billion represented. That is a strong number, and things are genuinely getting exciting. When you take a look at the complete tokenized asset market overview, we are sitting at $31.41 billion total, and we've seen over $1 billion added in just the last 24 to 48 hours. I track this almost daily now, and the momentum is very real. On the XRP ledger specifically, looking at the full view, we're at $3.6 billion, holding at about 46% share. We are roughly $400 million away from catching BNB chain, and we still have a good distance to cover before reaching Ethereum or Canton. But Canton, of course, is leading specifically in the repo side of things. But man, things are looking up. Things are looking up in a real way. And here's more great news. XRP spot ETF volume last week pulled in $34.21 million. To put that in perspective, back in March, we lost $30 million. Then in April, we gained $81 million. And now, in just a single week, we've already done $34.2 million. Are we back? I think we might be. Let's take a look at XRP Insights. We are at 847 million XRP locked up, getting very close to that 850 million milestone. And the next major goal? 1% of the total supply, which is 1 billion XRP. Current assets under management sitting at $1.2 billion, priced at $148. If XRP price doubles, you're looking at approximately $2.5 billion in AUM almost. Daily volume at 30.17 million. Bitwise leading the way, and it's not even close, at 1691 million. Franklin Templeton at 765 million. Canary at 4.1 million. Grayscale at 1.1 million. More products, more value, more investors, more regulatory clarity. We need all of it, and it looks like we're starting to get it. So let me just bring it all home here. Ripple has secured a $200 million debt facility. Ripple Prime is plugged directly into the DTCC. BNY Mellon is the custodian and clearing bank. XRP is confirmed as institutional collateral. The XRP ledger is number 2 globally for tokenized commodities. ETF inflows are surging, and the full DTCC tokenization launch is coming in October 2026. The road from DeFi to Wall Street isn't just being paved, it is being built. Brick by brick, institution by institution, deal by deal. As Versan put it, and I think this is absolutely worth sitting with, price discovery for XRP will eventually be based on the percentage of global settled value it captures, not arbitrary market cap. When that model flips, the numbers get very large, very quickly, and I believe we are watching that model begin to flip right now. Let me know what you guys think down in the comments. If you want to support this channel, please like, share, and leave a comment. The best way to support me beyond that is through the partner links in the description below. Every click genuinely helps keep this content coming. Alright guys, until next time, aloha.